I'm Steve Brice, Standard Chartered's Global Chief Investment Officer. Welcome to our monthly Signature CIO Strategies update, where we first provide an overview of our CIO office house views, and second, share how our Signature CIO strategies have performed and how they're positioned for the months ahead. Let's start by setting some context. Q1 ended on a high note, with global equities reaching record highs driven by economic optimism. Data suggests a soft landing in the US is increasingly the most likely outcome in our opinion. Labour market data has shown some weakness under the surface, but has thus far held up well at the headline level. And inflation has been a little bit more persistent than expected, but in our opinion the broad downtrend remains intact. Against this backdrop, we expect the Fed and the ECB to cut rates starting mid-year, which we believe is a tailwind for investors. Looking forward, we have two key views. First, in foundation allocations, we're overweight global equities. The improved earnings outlook makes up for a smaller than expected tailwind from lower US interest rates, in our opinion. Globally, we prefer the US and Japan markets, which we expect to continue to outperform. Second, we still see an attractive opportunity in global bonds, but acknowledge that yields may fall less than previously expected. As such, we now have a neutral allocation to fixed income as we see equity returns outpacing bond returns in the months ahead. Within bonds, we also turn neutral on developed market investment grade bonds based on the same rationale. Let's now turn to the performance of our Signature CIO strategies. During the month of March, our Signature CIO strategies registered solid gains. Our conservative, balanced and growth strategies were up between 0.4% and 2.9% in March, and the income strategy was up 1.8%. Year to date, all strategies have shown solid performance. Looking ahead for the rest of 2024, we see a higher probability of a soft landing scenario, and we've translated this view into our strategies by trimming our allocation to developed market investment grade government bonds, as we believe the scope for strong returns in this area has reduced. We retain an overweight allocation on equities, particularly in the US and Japan, and indeed we've added to our Japanese equity allocation as the Bank of Japan maintains an accommodative stance and valuations remain attractive. Looking forward, we believe our foundation allocations are well positioned for the current market conditions, but remain vigilant for any surprises. Thanks for joining me for this monthly Signature CIO strategy update. For more information, you can go to our sc.com website or reach out to your relationship manager. I'm Steve Brice, and I'll be back with an update next month. See you then.